Hello guys, welcome back to my channel. Today we are going to talk about income indefinite in context. In their day-to-day lives, individuals generally focus on both their levels of disposable income, that is their total income minus taxes, and their discretionary income, that is the amount of any left after payment of taxes and expenditures for necessities such as food, clothing and shelter. In dealing with their personal business and investment activities, individuals are concerned with income as determined under tax rules, and especially in the case of business owners and investors, financial accounting rules. Although tax and accounting rules have similarities, each system has special rules reflecting its distinctive context and purposes. Generally, taxation and financial accounting measure income over a 12-month period, while financial accounting income is comprehensive. Taxable income is calculated with special statutory exclusions, exemptions, and allowance that vary by tax status, income source, and individual and business decisions. Taxable income. For taxable purposes, the tax code attempts to define income to reflect taxpayers' actual economic position. In the interest of clarity, efficiency, and ease of administration, the law provides certain fixed allowances. For example, the personal standard deduction. The general tax framework applies to taxpayers' personal revenue other than tax exempt income from all sources and offsets such revenue which deduction for expenses and losses to determine taxable income. In addition, varied public policies underlie a wide range of tax rules that causes calculation of taxable income to diverge from purely economic calculation. For example, such policies include helping to finance government by making government bonds tax exempt, addressing social welfare needs through tax-free freeings and benefits and tax favored treatment for retirement savings, directing benefits to lower income individuals by proving some tax credits that are phased out at a higher income levels, and promoting energy efficiency through special tax credits. Three categories of income are of principal concern to taxpayers: ordinary income, capital gain, and tax exempt income. Ordinary income. The tax law distinguishes ordinary income and loss from gain and loss on capital investments. Ordinary income encompasses earning, interest, regular dividends, rental income, pension distributions, regular annuity and retirement account distributions, and social security income received by taxpayers whose total income exceeds certain thresholds. Ordinary income is taxed at rates ranging from 10% to 37% in 2022. Taxpayers whose net investment income exceeds specified thresholds pay an additional 3.8% net investment income tax. Capital gain. Gain and loss realized on the disposition of capital assets are treated as capital gain or loss. The tax rates on net capital gains realized with respect to assets held more than 1 year are 0%, 15%, and 20%. Capital assets include personal residences and investments such as real estate, stock, bonds, and other financial instruments. Qualified dividends, that is, dividends distributed with respect to US and certain foreign corporate stock holdings that meets statutory holding period requirements, also are taxed at capital gains rates. Tax exempt income, interest paid on certain bonds issued by governmental entities is treated as tax exempt income. Interest paid on federal bonds and treasury securities is exempt from state and local taxation. Interest on bonds issued by state and local governments is generally not subject to federal taxation. Municipal private activity bonds are not subject to the regular federal income tax, but they are subject to the federal alternative minimum tax, and states and local governments also exempt interest on state and local bonds and taxation. Business income, GAP income. Most business include all public companies employ standard financial accounting methods and practices, generally accept accounting principles to determine their income and worth. Audited financial statements prepared in accordance with these rules are required for public companies' filings with the US Securities and Exchange Commissions and for filings with other governmental agencies and regulatory bodies, investors, asset business, financial statements to use them to compare performance of companies in the same or different industries. GAAP does not incorporate the type of public policy deviation from pure economic calculations that are embodied in the tax code. The two systems employ different timing standards for recognizing revenue and expenses. Generally, the snapshot of income and business value determined using GAAP provides a picture of business income and worth that often is closer to economic reality than the results of tax accounting. Is there a standard definition of income? The definition of income depends on the context in which the term is used. For example, the tax law uses the concepts of gross income, which includes all income in all its forms, and taxable income, which is gross income net of expenses and other adjustments. On the other hand, the standard for financial accounting, generally accepting accounting principles, uses the term revenue to describe the comprehensive amount of all fees for products and services, and it reduces that amount by expenses to determine net income. In addition, the calculation of income will be vary depending on the scope of the context. Example, an individual, a household, an industry, a nation, etc. What is taxable income? Taxable income is the total of all income from all sources and in any form, example, money and property derived adjusted to exclude tax exempt amounts and reduced by allowable deductions. It is the amount that is subject to income taxation. Which categories of income are tax exempt? Federal, state, and local tax laws specify certain categories of income that are not subject to income taxation. Generally, interest paid on the state and local government bonds is exempt from federal law income tax. Federal law also exempts interest paid on some special narrow categories of federal agency. Debt, state tax laws exempt interest on US Treasury bonds. Some states also exempt interest on state and local bonds. In addition, distributions from Roth 401k plans and Roth individual retirement accounts IRAs are tax free. Charities and other tax exempt organizations do not pay tax on their income except for income, if any, from unrelated trades or business. So this is it for today, guys, for what is income or income indefinite content. I will see you in the next video. Thanks for watching.